So we started the day where inflation came in higher than anticipated, but the market did not care, pushing rates even lower, almost to 8-month lows. However, by the end of the day, we saw a sell-off, we saw a market correction, and we ended the day with higher interest rates. And more precisely, we saw banks take a lot of that yield spread from the previous day right off the table. So those who listen to Locke, kudos to you. What's going on, everybody? My name is Kevin Weedmark, aka The Mortgage Mouth, bringing to you the Daily Dose, a very quick 2 minutes of what happened today. And just like I said, PCE came in higher than forecast, but initially the market just really did not seem to care. Knowing that the tariffs and the impact and the potential that the tariffs had, the market seemed to shrug it off as, hey, a near miss, no big deal, nothing to overall be concerned about. However, as the day progressed, what we saw a lot of talk from the Senate about nearing a potential budget bill. We've talked about that extensively, where that is going to add to the federal deficit, a big no-no as it pertains to tariffs. The concern there is obviously prices will go up, inflation will escalate. And then we also had the current administration, Trump and specifically, launch on his social platform that they are cutting all conversations with Canada regarding trade. Once again, that is going to spark fears of inflation. And in my opinion, that's what drove the sell-off this afternoon. Now, heading into next week, it is a short week. We will have jobs. And you can bet that is going to be a huge number that the Fed is going to be looking at. And if it comes in lower than anticipated, you can bet your bottom dollar that there's going to be ongoing pressure for the Fed to cut that rate sooner rather than later. Once again, September's the date. All right, y'all have a wonderful weekend. I'll be coming to you on Monday with another episode of the Daily Dose.